Hi there, this is Ali Salarian, broker at the Success Team with Remax Success Realty. Today I'm going to talk about another episode was posted there or broadcasted by Andrew Chang, CBC journalist, and he was talking about real estate, but this time he was highlighting a subject called "Why Are So Many Bills Going Bust?" So basically, he was talking about pre-construction projects; those are built by the developers, and was highlighting the news. He was bringing news, which is again, I like Andrew Chan. He's a typical journalist, and he's smart. He does his due diligence. He asks experts somehow, some up to some a certain extent, and he extract the news. But remember, media likes only bad news. If there is a good news, there is no news, and this is how they attract the traffic and attention of the audience. Now, experts like ourselves in the business with experience, not just for real estate, in my case, corporate investment analysis, come and step up and has to clarify the insights, the details to the consumers. Otherwise, it's going to be unfair and it's going to be misleading. So that's what I'm doing. We're doing at this team, at the Success Team. And I hope you benefit from today's episode. So let me start putting his video here. As you see, I put it down in the description. So he started his video talking about a project, as you see here, three towers in Kitchener, Waterloo. The project was, I think, back in 2020 launched, and supposed to be three towers. And as you see in the picture here, is there is only one tower is being delivered and nothing with these two towers. If you see here, two towers are here, and because there's a problem with the developers. Let me clarify this point up to the extent this is normal with the developers, especially in the mega big projects, whether it's a condo building or low rise like houses. They go and deliver in phases for many reasons. I'm going to explain here. Number one reason is logistics. Number two is the price growth. So they release it, they make sure the first one is sold, then they come with the second and the third. In case of houses, they go phases like neighborhood or subdivision per subdivision. They make sure, especially when the market is in a good shape, the price growth, the market grow, and they release it, and they make sure that their clients, whether they are a buyer, first buyers, or principal buyers, we call them, or investors, to enjoy the growth of their investments. So that's normal. Now, then I'll carry on in the video. So that's normal. Now he tackled the rate of insolvency that has been increased in the last couple of years by 50% higher than the 10 years average. So this point, I let me explain one thing is you got to understand that there are different type of developers in the market. Some of them are really experienced, being like 50, 60, maybe more than that in the market. And they are very experienced, very solid. Believe it or not, some of them are cash rich. They finance the project by themselves. I've seen them. I'm not here to mention the name or promote one over the other, but there are some of them that they don't even need to borrow money from the bank. Some of them, in fact, they build first and then sell later. So depends on the developers. So you got to find a solid, strong developer with a track record and do your due diligence, or your realtor do that for you, right? So that's, and avoid the small one, and which I understand the recent time a lot of landowner, let's put it this way, they become a developer or they join venture with a builder, and they start to develop that piece of land they have, hoping that they get step into development and they become eventually a small size or mid-size developers, right? I'll carry on here to see what else. So in his video, he mentioned one of the project everyone knows about in the downtown. I'm not going to mention who is the developer, but everyone knows it's on Bloor and I believe Young, which is high rise, one of the tallest building in the downtown. it's the news everyone knows. It's in receivership. Now, when a builder for some reason cannot continue the project, and the project exists up to a certain extent, let's say I don't know how many floors, always other builders, bigger builder, they come try to approach them and take over after they go in receivership. Receivership, this is one step of the bankruptcy. So they announce their bankruptcy of that project, then they go in the receivership. Receivership means they sell it, whether another builder take and carry on, or someone could completely buy it and pay off the debts, investors, and definitely those people they bought uh, from the builder, and their money, let's say, supposed to be in a trust account. Now, I admit some builders or developers in the past, I think at least one or two in the news came that they totally vanished. They ran away. Although there is a trust account, but many people, they don't understand the trust account, whether it's with a lawyer or real estate brokerage or a developer, doesn't mean it's protected by third party, by the government or by the bank. Simply the one who has a right to withdraw money from the account, or the account holder, or the signatory, can go and withdraw money and walk away with. So that's why the big one, they will never do it, but you got to be careful about the small one and beginner. It could happen, especially when things goes wrong, right? So let me carry on and remember what else he was talking about. So then he started to explain the concept, how talking to some experts, how the developer get their money. So what they do, they have to sell 80% of the project, 70-80%, in order to get the money from lenders. That's true. I used to be on the lender side, and they gather 20% as a down payment. It depends, sometimes 15, 20%, 10% from now to the closing. And they structure the deposit in a way, even nowadays, we see some builders, they go as low as 5%. Now, and if the builder does not pre-sell 70-80%, the lender won't advance that money to them, then they might be in trouble. Then they have to find an alternative way, or in some cases we heard in the market, what they did, those developer, they just canceled the project and returned the deposit back to the buyers, whether entirely or partially. We know in the past happened at least with the two builders in the north side of the GTA, right? Now, he moved, Andrew, to the reason why the developers are in trouble, the rising cost, and the cost started to come because of what happened during the past time, which is during the pandemic. Now, he mentioned something very, very precisely. He said, the revenue is fixed, the cost is variable, which is true. When you sell something, you cannot go back and say, I sold you $1,000 per square foot or a unit for $500,000. Now I'm increasing my price because my back end cost is increased. Nowhere you can find in any clauses of the agreements, which is drafted by the builder's lawyer, talks about that. But what the builders, they do, I mentioned that in my earlier video, is, I keep saying builder, it should be developer, but it's a common term in the industry. They say builder or developer, but let's call it developer here to be more professional and precise with what the journalist Andrew Chang released. So what the developer, they do, there are multiple layers of due diligence and feasibility study done. And furthermore, I'm going to explain as a former banker, corporate banker and lender. It starts with the builder themselves or developer themselves. They put a feasibility study down. Sometimes they have investor on their back, and they put scenarios for the sales. If we sell this much, if we sell that much, if this much, at least 3 scenarios, and they go and they do same scenarios for their costs and cost of building. The second level, when they go to the city to take a permit, the cities, they have a plan in terms of demographic, like meaning they don't grant you as a builder a permit without making sure that enough population are there, or even the infrastructure can take over this process. So they know there is a growth of population, they have all the stats and everything. They say, yes, there is a demand in the market, and now we're granting a permit for that. And that's unique in Canada. Some other countries, depends if you have a connection in the government, you'll be granted the land or a project to build. And unfortunately, Unfortunately, which is fortunately, we don't have it in Canada. So that's why the Canadian market, when it comes, in particular, let me talk about Ontario, when it comes to the demand and supply, we always have like a little bit shortage in supply, and that's very important in order to keep the price going up. Otherwise, it's like other countries, if we have more supply than demand, even during the good time, I'm not talking about during that time with the problem, is going to be a problem. So that is the second layer. The third layer is when it goes to the banks, lenders. So what the banks and lenders do, mostly big transaction, we call it a syndicated deals, where there's a lead bank, that could be RBC, could be CIBC, Scotia, TD, any bank, take over the project and talk to another 4 or 5 lenders, could be big 5 banks, smaller credit unions, and so on. So the bank and the lead bank and the other banks, they do their own due diligence in terms of sales. So they put scenarios, they call them stress. Scenario 1, this my sale. Scenario 2, this my sale. Scenario 3, this my sale. High, medium, low. And they do another scenario of stress. We call stress. They go for the expenses in terms of if the expenses goes high, this much, and that much. So there is scenario for sales, there is scenario expenses goes high, and there are other scenarios sometimes if there is an exchange rate involved, which in case of the developer there is not. So that's what the bank do. One more layer is OSFI. I mentioned that in my previous video, which is acting as a central bank. They can and audit. They come and audit and double check on the file, forgetting that there is even external auditor. Banks, big banks, they have. So external auditor could be McKinsey, House, or Ernst & Young, or any of those consulting firm. They double check, they audit the files and make sure that there is no problem. Then the last thing, OSFI comes and double check and make sure there is no problem with the file. So you have all these layers were mostly to do with the forecast and projection, because it's something for the future. So the big builders, those especially getting big money from the bank, they are on kind of safe side, and they check that they have enough support in case if things goes wrong, that they have enough equity or money. They put lien on other projects. There is a lot of things to go into it. I don't want to get into the details of how the corporate banking works here. Now, let me carry on and see what he was talking about. So, yes, he referred that to the pandemic. What happened in the pandemic is there was a shortage in material. There was a shortage in labor because people could not work. And he mentioned that the job vacancy for the trades, it jumped up like 28,000, which is 30% more than normal. And the building materials going up, and there was a supply problem with the building materials, and salaries, cost of salaries and wages were true. On the other hand, he was talking with one of the experts. He said there was a lot of money given by the government, which I don't agree with. Government gave them money, barely pay for the people day-to-day money. So I don't think with that money, the people or the checks $500,000, they could put it as a down payment to buy something from a builder. On average, you need 100,000 plus. So what happened is the interest rate dropped during that time, because that the plan government came with in order to push more supply and boost the economy. So there was a cheap money there, and the rate on deposit dropped down. So if someone has let's say deposit 100,000 sitting in the bank, they were making 3% interest rate on it during that time. That time, everyone knows, went below 1%, in some cases 0.5%, in some cases 25 bips. So what people did, they said, let me get my money out and put it in something else, whether it's real estate or crypto or stocks or whatever. This is what happened exactly. So it has nothing to do with the government give people checks. That's for the corrections. Okay. And so he carried on, and he with consulting some expert, he started to talk about the development fees, including taxes, has gone up. So for those people, they don't know what is development fees are. Development fees are the fees where the city, the town, charges the developer for their services, including utilities and electricity, water, sewage, everything. Because of that, the new development came in, they charge the developer, and developer, they pass it to the buyer. And they call it levies or the fees. Everyone's in the industry, agent, they know what is that. So that's why it's very important when you 100 200 page of agreement of purchase by the builder, or developer, which is not the normal the one we use like for resale, which is Oria, which is very organized, very simple. You got to go to a lawyer and discuss it with your realtor and more lawyers within the 10 days time, and make sure look for those hidden things, which is one of them is development fees. So most of the builder, they cap it, means they cap it up to 10,000 or 20,000 or whatever, 5,000, and meaning if those fees go up, so you don't pay more than that. So who's going to mimic that cost or take it over is the developer. Now, what I know and everyone knows, development is very lucrative business. Some developers, they make really good margin, and even if the cost goes up, they can take over that and still deliver. Okay, their margin goes lower. That's understood and understandable, but they won't go in loss, right? I'm talking about the big developers, right? So let me see what he. The one point is he was talking about there is something called occupancy, which is interim closing. So that from the time you get the key till the time the get registered with the city, and then you can close, mean pay, bring your mortgage, whatever, and you can register it with the city because the city is ready. So it's a process. Sometime for a condo building takes as long as 1 year or 6 months to 1 year. With low rise like houses, shorter than that time, it could be a few weeks or few months. Now, during that time, there is something called occupancy or occupancy lease cost. That is a combination of interest, insurance, and maintenance. So the builder says, and it is gone high, to be honest, nowadays, because of interest rate is gone high as 8 and 9, 10 sometimes, which makes it very expensive nowadays, especially if you take over a project during a time like nowadays markets, but it's really painful. So, and in that video, one of the experts, he says, because the developers, they go back to the bank and borrow some of the cost. That's why they have to pay high interest on that, and of course, a cost of construction, because with 20% is not enough to build a project, or 5% of 10%, which is true. Now, let me let me explain that. A couple of things is we spoke about the stress scenarios and price projection, good builder and bad good builder or developer, bad builder, and developer, they sells in a phases. Let me talk about one important points here. The delay in the projects by the developers sometimes happen for a reason. They purposely do that, and that sometimes happen even by the big builder. They really do that. The reason why, because they want to hold and avoid the bad markets. So it's a smart move by the builders. I know it costs money, but they try to delay it, to do not deliver during a bad time. It could be a bad season. It could be like interest rate is very high. So the technique used by some developers, everyone knows in the market, in order to delay, if there is a room to delay, especially in case of condos, right? And but anyway, delays happen with all projects. There is no project right on time. So that's why most of the developers, they have three time they can delay the project, 6 months between each time. They put in their contract, because we have challenges sometimes with the labors. We have challenges sometimes to do with the weather. So that's why they put it. It's normal in this market because of the challenges we have in this marketplace. Now, finally, it is very important to know that when you buy from a developer, you buy with a future price. So that's why he was talking at the end about the prices are, or one of the experts or realtor was saying that when you buy from a developer, the prices are higher than the today's market. So what we have here, we have something what we call resale and pre-sale. Resale is something exists, and pre-sale is when you buy from a developer, so something pre-sale before to build. Now, when you go to the builder, always you see the prices, they go higher than today's market. The reason why, because they're delivering something to you in the future, so they give you a future price. They cannot give you today's price. Like, for example, I'm selling this pen to you, but I'm not delivering it to you because I'm manufacturing in the factory. So I'm gonna give you in the future. So I have to give you the future price, especially when there is a time, like big time, like lengthy time between today and the future. We're talking here about years, months and years, sometimes go 5 6 years. So it's not logical to do it because there is an appreciation depreciation factor, right? So you got to be careful, and you got really to do, and this is realtor's job, is to find out what's the price in this example, in the Excel sheet. For example, uh, you see an example of, let's say, one bed in Mississauga today's market is selling for 550, 600 feet. If you want to buy the same thing, I'm just giving an example, it's not accurate. From a developer, they sell it at 750 delivery after, let's say, 5 4 years. So obviously, you see now there is 200,000 difference between 750 and 550. So that 200,000 divide by 550 is going to be, and divide by the 5 years, is going to be 7.27 or 7, let's say 7.5. If I change this number and put it as, for example, 650, another scenarios, so you see this goes down to 3.6. So let's say 7.5 or 3.5 per year growth. You can ask yourself, or ask your realtor, or you can do the due diligence by yourself. Is that reasonable? Is that make sense that the market is going to grow whether 3.5 or 7.5 in the future from now till then? So that is the decision you have to take. I know my builders, they say, or this is the price with other developers, but that doesn't mean, especially in today's market, you just listen to them and buy it from them. In this case, and this is what happened in the past, it was better for you to buy an existing resale or unit. So make sure, do the math, the projected price minus today's price, that margin, which is the growth for the price, divided by the period, whether that makes sense as a growth per year. In my opinion, anything between 5 to 6% makes sense per year in real estate during average of low market, high market. But when you cross 7 and 8 and you go 10 and beyond, it doesn't make sense. In my opinion, it should be avoid per year, avoid that kind of project, because sometimes in the future something happened like this. Interest rate used to be down, gone up, is going to go down, and it's going to go up, and there's a cycle for it. Depends on the economy and what happens in the world, and too many factors. I'm done here. I wish, or I hope in better term, that you benefited from today. And as I always say, the news comes always talking about bad things, but it has to be clear enough for the consumers to understand what's in it, and if there is some or any benefit, you can benefit from the situation. As I said, nowadays you can go to the developer, you can get a deal, they give you a discount in prices, they stretch out the payments, some of them they give you even an interest back on your deposits. How they do that? They give it some from their profit, and it's built in the price. Be careful for that. And sometimes from the money they put with the banks, which is nowadays at 4 or 5%. And some of them they give free parking, some of them they give free lockers, and free things and gifts, and more and less. So shop around, look for the developer, not the lowest in the price, the builder who has a track record of project, who has an iconic name, who is all over the internet, everyone knows about them. That is very important, and we are at the Success Team happy to help you. You can reach out to us. Our descriptions below this video, as well as the CBC Andrew Chang video as well. We're happy to help you and wish you successful real estate. Bye for now.